morning, everyone, and welcome to the CBI at 10 this Thursday morning, the morning after Rishi Sunak, the Chancellor, delivered what was by any measure a historic budget, one that gives us certainly more than 45 minutes worth of post-match analysis, but 45 minutes is what we've got. And so in the course of the next 3/4 of an hour, we're really fortunate in being joined by Ray Newton-Smith, the Chief Economist of the CBI. You'll know Ray, very nice to see you. David Gauke, who's now a partner at Macfarlane's, but as well as many other roles in government, spent a fair few years in Treasury. I think we'll try and mine your experience from Treasury, but also a bit work and pensions, David. It'd be really interesting to your thoughts on this. And Rodney Appiah, who's the chairman of Cornerstone Partners, and is going to, I hope, provide a lens, Rodney, on investment in the small and medium-sized sector, the startup sector. Rain, can I start with you? Who knew that we could be as excited by a phrase, super deductions, a masterful piece of branding, but did it to your mind pass the test that Tony Danker, the Director General of the CBI, essentially set for the budget on Monday, which was this a budget for business investment? What did you make of it?
Look, I know we'll come on to talk about the near-term COVID support, but I think the theme of the budget was definitely around business investment, and I think there were some really helpful measures. But I think that the challenge is it's really about boosting business investment over the short term. So that super deduction is all about trying to get businesses to bring forward business investment and also hopefully raise the level of business investment. But it's all concentrated in the first 2 years. Now that makes sense, as you know, that's what we want to kickstart. That's what will get our economy on a more sustainable footing. But I think the real challenge is that super deduction, which means, you know, you get 25p back off your taxes when you're investing over the course of the next 2 years, is that in 2023 that super deduction comes to an end, and then at the same time corporation tax goes from 19% to 26%. So it's a really large cliff edge at that point, and that increase in corporation tax, which I think everyone recognizes over the medium term, we needed to see an increase in corporation tax to help our public finances be more sustainable. But I think no one quite expected a 6% jump in 1 year, and that really will affect the return on investment. And I think the other challenge is the bit that we have been talking about is, yes, we may look competitive on our overall headline corporation tax, but you need to look at business taxation in the round. And if you talk to our retailers, our manufacturers, they will say, look, the taxation on business property, business rates, we're the highest burden in the G7. And the Chancellor has said he will look at reforming that, but not to the autumn. So it feels like there's a real wait and see to see whether there will be fundamental reform on business rates to get the investment in energy efficiency in our homes, to get wider business investment in property, in our high streets, in our manufacturing, in our manufacturers, really going over the medium term. So for me, I think there is a question about what are the right incentives we have to boost investment from 2023 onwards.
So Raina, let's come back. So I suspect the meat of the discussion is going to be around this judgment, you know, tax breaks and incentives in the short term, longer term taxes on business in the medium longer term. But let's take the near term right now. What, you know, the CBI, I know, has been engaged, I know you have, and the team have been engaged with Treasury for a while on the immediate support for businesses and for employees. What did you make of the first third of the budget then around short-term COVID support?
Look, I think all the main building blocks were there, the things that we'd really been calling for. First and foremost, the job retention scheme extended in full till the end of June and then tapering to September. And those were two really important things that we'd been calling for. And that does feel like the right balance. Of course, it would have been great for so many businesses and households to get that announcement a couple of months ago. I think we knew it was coming, but we just had to have faith that it would come in the end. And I think also, you know, the support, the business rates relief being extended for hospitality, retail and leisure over the course of 3 months. And importantly as well, some extension of grants, the direct support to businesses in those sectors who will remain closed for a period of time as we gradually reopen the economy. We know those will be a real lifeline. But I think for me, there were two really important gaps. First of all, there wasn't really any recognition for businesses that are in the supply chain of some of those sectors that are closed. You know, the food and drink manufacturers, you know, supplying into our pubs, etc. The manufacturers who are supplying into businesses that are closed. There was only a very small amount of money, around 475 million in total, for direct grants that they can apply for. So I think there's a real question mark about those supply chains, whether the support is enough. And finally, the other sector I'm still very concerned about is aviation. They did, as we had called for, extend some of the business rates relief for 3 months to the aviation sector. But the problem is the fixed costs in those sectors are so large, and particularly for the larger airports, the overall relief they get on business rates is a very small proportion of their overall business rates bill, and certainly of their overall fixed costs. And in a summer where we may still see some restrictions on international travel, that's something I've definitely got my eye on. Are we going to make sure we still have the capacity we need in our aviation sector, because it's so important for how we trade, how we move with the rest of the world.
And Rain, I'm interested in the macroeconomic judgment here. One of the things that's been really surprising and impressive, you know, it must be to the Chancellor's credit and the credit of everyone involved, CBI included, on the furlough scheme, is that the unemployment rate is now predicted to go to 6.5%. That's higher than it was, no doubt, but nowhere near the 10, 11, 12% that people fear. This is a very different outlook on unemployment. But it's still the case that unemployment is going to hit some people more than others. There's still real concerns about, you know, younger people, women in the workforce. And I just wondered what you thought of the Chancellor's central judgment in this budget, which was that we couldn't allow debt to keep rising for too long, that we needed to start planning now for bringing that debt back in line. And I wonder what you thought of that in the context of what you're seeing, for example, in the States, where you're seeing much, much bigger stimulus packages and much more significant increases in debt. Where do you stand on that central judgment?
Look, I think it's a really tough one, and I think what we'll need to see is that the Chancellor will need to stand ready to act, you know, as we emerge from this pandemic and as it involves. I mean, I think in general he's got the balance about right. It is still very much a stimulus budget. I think over the Parliament it's around 60 billion in extra spending. So, and I think importantly he certainly listened to us and to others in terms of not increasing taxes now. So even though there are some increases in corporation tax, and the increases in personal allowance will be frozen, which will have an impact on households, that actually doesn't kick in until later. So he has waited before trying to do anything around taxation. And I think that is really important. And he also has time to sort of change tact overall on that. So I think it is about right, because I think fundamentally over the medium term, we do need to make sure that our debt to GDP ratio is stable. I think we can tolerate this higher level of debt because interest rate payments are so low. But I think some of the areas of spending and these issues about the experience of different households that I think were still a bit unanswered in the budget. First of all, I think it was important that he extended the universal credit payments for a few more months, but we know it's the low-income households who've been really hit by this crisis. And I think the second big area where there is a question mark is around social care. Right, there's definitely more funding for the NHS, for vaccinations, and we've done so well on that. But I think there's a big question over the medium term around social care, and I think that issue will need to be addressed over the medium term.
So Rain, I'd like to take you and David down memory lane for a moment. A few people have a memory lane that includes fundamental reform and changes to the nature of corporation tax, but the two of you do, right? And the reason I'm interested in that is it seems as though there are two judgments that one flowed from the other. The first was the Chancellor said that he wasn't happy to keep on increasing debt. And people will debate, as you say, Rain, given the cost of borrowing, whether that was the right call. But the second call then was to say, in order to try and pay down that debt or rein in that debt, he would try to do that through taxes rather than cuts in spending. And within the distribution of taxes, that there would be a greater burden on business. And David, I wondered whether you could just start by giving us some context to this, because the last decade, if I remember correctly, was a good deal around bringing down corporation tax for reasons of global competitiveness. So can you give us your sense of what happened yesterday?
Yeah, I think, James, you framed it very well, because there are two fundamental questions here. One is about, if you like, the big sort of fiscal judgments, and do you need to stabilize the public finances, and when do you do it? And my personal view is I think the Chancellor got those judgments about right. And then secondly, if you are going to do something with the public finances, how do you do it, and which point? He has relied very, very heavily on corporation tax, in part because of the tax lock pledge made in the 2019 manifesto. And on the corporation tax side, declaring an interest as the junior Treasury Minister that brought the rates down, I think he's made a mistake here in the long term. I mean, just to set out the argument why corporation tax was at the heart of the government's growth plan in the early 2010s. It was the view that, look, capital can be mobile, particularly if you're wanting to attract inward investment from multinationals. They've got choices as to where they put their activity, where they invest. And we wanted to send out a very clear signal that the UK was open for business, that this is the place to come. Now, critics of that strategy will say, yeah, but we didn't get huge amounts of business investment following the cuts in corporation tax. And that is true, although I think one has to bear in mind that at least since June 2016, there have been other factors that have perhaps made it harder to attract business investment to the UK. But this is quite a dramatic change of approach from the Chancellor. I mean, we'd already not gone ahead with the reduction to 17% from 19%. I think, as Rain said, it was widely expected that corporation tax rates were going to go up. But I think there is a challenge in terms of the signal this sends the rest of the world. On top of the fact that clearly trading with our biggest trading partner is now harder than it was previously. Are we becoming a little bit more insular? Are we less enthusiastic about attracting investment in the UK? So one of the challenges, I think, for the government will be to make sure that we are seen as a sort of open, outward-looking economy that is wanting to attract inward investment. As I say, I think I would question whether this is a sensible move in that context. But politically, if you want to raise quite a lot of money, this is much less painful than taxing people directly, and that's clearly the judgment that the Chancellor has taken.
Can I, Rodney? I'm interested to know what you think. I wanted to stick with these business incentives and business taxes for a few moments. And Rodney, I'm interested to know what you think of the quote unquote super deduction. If I understand it right, it's now 130% deduction on your investment expenses. I.e., you get all the money back from the money you put in on the investment, and you can claim a 30% more. I can see Emma Selby in the chat has asked, is that exactly the way it works? Ray, are you nodding? Have I got that right? Is that how that works?
Sorry, I was looking at the question in terms of what was the question?
That it's 130% deduction on your business investment against your overall tax bill.
Yeah, so I think I did notice there's been some questions on that. I think one of the things that that we need to sort of look at in the detail is how the different assets will have a slightly different coverage in terms of that super deduction. But I think the way that at a high level that businesses can think about it is if you're investing £100,000, you'll get £25,000 off your tax bill for that. But Rodney, I'm sure can on that as well.
Okay, and Rodney, I guess the reason why I was interested in your view on it is that if you're a large company that's been sitting on quite a good deal of cash, I can well understand you think, well, this is terrific, right? I'm going to get 130% deduction, I'd be mad not to start spending some of my cash on investment. If you're a startup or if you're a small business, Rodney, and I know Cornerstone is more, at that end of the economy, you're probably not sitting on piles of cash. And so I wonder whether it's going to be the incentives to enterprise that I know the Chancellor would like to see.
Yeah, look, and I think it's a really good point, James. I think that, it's clearly welcome for large businesses, those that are probably going to be making some significant capital commitments in any case. And you saw, for example, BT Group's share price rocket off the back of the announcement because of their commitment to rolling out fibre broadband. So that's welcome. But from a early stage business standpoint, which is obviously where I spend most of my time and engage with businesses, it's not massively helpful. In that you don't have the capital allowance budgets that would be required to make investments in this way. And I think, as Rishi Sunak sort of described it, I think it's very much tailored towards manufacturing businesses that are making capital equipment purchases rather than early stage technology businesses that need to invest in software or developers or hire staff, etc. That being said, I think there are other measures in the budget that were welcome. So the continuation of the Future Fund, a further £375 million added to that to support early stage businesses through the Future Fund breakthrough. That's welcome. The reintroduction of the small profits rate, which ensures that the vast majority of early stage businesses won't get whacked with this 25% tax hike in corporation tax. That's hugely welcome as well. So, I can understand why the Chancellor's gone in that direction, but I think it would have been great to see a little bit more support for early stage businesses targeted around investment, particularly around staff.
And Rain, I'm just interested to know from the CBI's point of view whether you had much incoming yesterday from businesses, picking up on, I suppose, David's point overall about the extent to which the hike in corporation tax in 2023 will act as a disincentive on investment, or is it just way too early to tell?
So I think we were definitely speaking to business leaders about how they're seeing that. I definitely had one CFO who said, look, who was definitely taken aback, I think, by the extent of the increase in corporation tax. And she said, look, she's going to need to almost run the numbers. What does it mean? Because actually the super deduction is quite complicated. It depends on what type of assets you're planning to invest in over the next 2 years, what that might look like, and then also thinking about how a higher rate of corporation tax will affect your investment decisions beyond 2023, because it does affect that return on investment. So I think you'll find lots of CFOs are looking through the detail and trying to think how will this impact their investment decisions, because I think, as David has said, it does, and I think that's one of the things we said to the Chancellor is, look, if you are going to change corporation tax, there's 3 things we really want to see. One is, can it be predictable? Can you have a roadmap? So he has set out now what the intention is. I think all of that move in 1 year has taken people aback. And I think the second thing was, make sure you are encouraging business investment. And I think we have that in the first 2 years, but the big question is, what will happen beyond 2023? And I think we do need to have that focus. And then the final thing is about our international competitiveness. There is obviously, the US actually has plans to increase their own rates of corporation tax. So I think the Chancellor's making a bit of an assumption that when we look at that stage, the UK will still be competitive internationally, but he really has to have his eye on that. And actually, there's a real challenge domestically too. If you think about Northern Ireland, right, they will in 2023, if that's just transposed across to their to the devolved nation, they will have a corporation tax of 25%. And yet just a few miles on the other side of the border in Ireland, you'll have a corporation tax of 12%. That is a huge difference, right? And if I'm a business and I'm thinking, do I set up shop in Dublin? Do I set up shop in Belfast? I think that will have an impact on your decision. So I think that's something we really need to think about, is what does this mean for Northern Ireland? And the other area where the Chancellor has said he will review is, there is a surcharge for the financial services sector. And he said he will review that, because that surcharge is quite significant on top of corporation tax. So it will make them less competitive if it evolves, as it is at the moment.
Thanks, Rain. David, can I ask about a few dogs that didn't bark? One of them was carbon. I noticed in the chat there was reference made to the Chancellor's decision to add net zero to the mandate of the Bank of England. But given the focus on COP, given the climate agenda at the G7, there wasn't really any movement on carbon taxes. And in fact, the only carbon tax that's really available around fuel duty, he chose not to increase. What do you think is happening inside the Treasury? Is there just deep uncertainty about how to align the climate agenda with the economic agenda?
Yes, I think that's right, and there's a political tension as well. To what extent are you focused on those red wall voters, if you like? You've got the sort of Sun launching its regular campaign on fuel duty. We're getting promises from the Prime Minister that whatever happens, we're not going to tax people more for environmental reasons. But hard to see then how you meet your objectives when it comes to carbon emissions. And so I think there is a real tension there. I wonder whether, we know we've got a tax day coming up on the 23rd of March, whether it's possible that at that point the government might set out what it's going to do in terms of carbon taxes. I mean, there's certainly a need to to re-examine where we are on carbon taxes. But at the moment, the government is not willing to expend some political capital on this. Now, whether that's something as we work through the year, as we get closer to COP26, things will change. But yes, I agree. It was a striking omission from what he was saying yesterday. There wasn't really a plan on carbon taxes.
David, thank you. And Rodney, I guess another dog that didn't bark quite as much, or a little bit, was around opportunities for young people. What kind of support was available for people moving into the economy? And early stage companies are often the biggest recruiters alongside the service sector. Did you see enough there to incentivize different kinds of behavior?
Yeah, there were a few sort of announcements that I think were buried in the kind of the big splashy headlines around supporting young people. So obviously the continuation of the Kickstarter scheme, for example, is a massive help in terms of managing unemployment rates, particularly amongst young people. There's a lot of stuff around digital skills as well, and providing budgets to small and medium-sized enterprises to invest in digital skills, which I think is important. That's becoming an increasingly more important aspect of upskilling our staff, and obviously young people can benefit from that as well. The other thing that I think I was talking to David about just before we sort of came on live was this notion of the visa scheme, which has been touted. I think it's been pushed by the Tech Nation. I think the CBI have also been talking about it in some detail as well. That's going to be fantastically helpful in bringing really talented individuals from abroad to the UK, to some of our brightest early stage businesses, and a lot of that talent is young talent from abroad. Really capable individuals who are developers, bring particular skill sets that we don't have in the UK. And so knowing that we're able to still be competitive in that respect, in spite of other aspects that are going on with regards to Brexit and immigration more generally, I think is really, really positive. So there was a little bit of detail there. Obviously the minimum wage went up again, I think to £8. I think £8.16 from April of this year, which is encouraging. And the increase in the income thresholds obviously will benefit young people as well from next year, albeit it will then be frozen until 2026. So there were some indications that the Chancellor was thinking about young people. Probably one last thing worth mentioning is the fact that the introduction of grants to the hospitality sector and the leisure sector, and the gym sector, again, that hire lots of young people in terms of being able to provide that sort of front-facing customer service. Again, it's going to be super helpful in ensuring that those businesses become viable as they come out of lockdown and they get the necessary relief that they required to continue to support those staff. So that's to be welcomed as well.
Rodney, thank you. I mean, really for all three of you, I'm going to start with Rain, if I might. I'm sort of struck by your mention of CFOs. I suspect this was a budget that has CFOs and finance directors all around the country skipping into the office this morning, or in fact not skipping into the office, skipping into wherever they're sitting at home and working, thinking this is going to get interesting, because how do you make the most of these incentives over the next 2 years? And then how do you prepare best for the big increase in corporation tax? And how do you digest the uncertainty around business rates? How much, just on the deduction itself, the super deduction reign, I see that Jeremy Salisbury's asked this question, is there any upper limit on the super deduction? I didn't hear the Chancellor announce that, but I'm not aware.
I don't think there is, but to be honest, I wouldn't want to. I think it's something where we need to look at the detail, and I think one of the things we will ensure we do is provide some information on our website that is, you know, just that sort of fact sheet and guide, because I think you're right. I think CFOs definitely feel like there's quite a lot of work for them to do this morning, thinking about their investment plans and absolutely you know, poring over some of the detail. And actually, one of the announcements we haven't talked about, which I think is also relevant for some of the smaller businesses out there, is the Help to Grow vouchers. And that's something that we and Be the Business have been you know, calling on the government to set in place. And really that has two main elements. It's a way of making it easy for SMEs to invest in digital technologies and allowing a way to essentially have a discount on some of those investments. And secondly, a way of also having some more management training, either via business schools or business mentoring. And I think that's actually, you know, a really important package. And I know something that the Chancellor was keen to implement, and something we've been calling for and thought was an important part, missing piece, I think, in our encouragement of business investment.
And David, I'm just interested to know, just sticking with this sort of CFO, FDs kind of reading the small print theme, one of the questions I remember in the debate around corporation tax was that by comparison with some other taxes, it was not as predictable, and it was in some ways more manageable. And I wonder whether or not the 23 increase to 25% gives you pause to think, well, I wonder how businesses are going to manage their tax affairs between now and then, and whether it will collect the money that's forecast.
Yeah, good question. I mean, there's a couple of issues with corporation tax here. One is that it's inherently volatile, dependent upon the business cycle. So it does mean that from the perspective of the exchequer, the tax receipts are going to be more responsive to the economic cycle, which is a bit of a problem. But from the point of view of businesses, yes, I'm sure businesses are going to be looking at what they're going to do over the next few years, and some businesses will be looking at dividend strategy, obviously investment strategy. I mean, I do have a little bit of a worry with the super deduction, that yes, it might bring some investment forward, but it's not actually going to increase the total amount of investment. Maybe that's a useful thing as a fiscal stimulus, but it doesn't have great long-term benefits. Secondly, I worry for value for money in terms of the deadweight costs. So, will people have time to really ramp up their investment, or are they just going to get a benefit from the super deduction for stuff they were going to do anyway? Now that's quite nice for businesses. It's a little bonus, short-term bonus, but again, a bit of a problem in terms of improving the UK economy, because we won't see the behavioural response to the super deduction. That's the risk with it. But yes, you're absolutely right. There's a lot there for CFOs to be thinking about in terms of their strategy over the next few years, and to the extent that you can kind of bring your profits forward, then clearly the advantages for doing that.
And James, just a quick add on that point, that again, an announcement that may have been missed. I think Rishi Sunak also announced that you can now carry forward your losses for another 3 years, go back 3 years. So clearly that is a mechanism that a number of entrepreneurs and sort of CFOs are going to leverage to manage their tax affairs over the next 3 years, which I think was a welcome announcement.
Right. Well, thanks, David. And this may be one for you too, Rodney. How excited or otherwise should I be about March the 23rd and tax day? Is that going to be to answer a number of these hanging questions?
I think that's an interesting question. I'm not sure that we really know the answer to that. I mean, I have seen some speculation that this is going to be the sort of 10-year tax strategy set out. I'm perhaps a little sceptical on that. There's a long list of things that could be addressed. I mean, it's not just presumably going to be a lot of narrow technical points, because the Treasury published a lot yesterday. So presumably it's going to be more strategic. So whether it's going to be something on carbon taxes, we know we've got the business rates review later on this year, but whether they're going to say a little bit about that, whether there's anything sort of further hint to where they want to go with CGT. I mean, there was a lot of speculation that capital gains tax was going to be reformed, but we haven't heard anything. We didn't hear anything yesterday on that. Property taxes is another one that, again, where there's been some speculation. So in all honesty, we don't know, but they have made a bit of a thing of it, and it's not going to be all the sort of technical stuff that they normally put out with a budget, because they did do that yesterday. So we wait to see.
Yeah, I'm interested. Rodney, what do you?
Yeah, I think,
I'm not sure. I'm smiling at the point about excitement, but what do you? What thought do you have on what's coming our way?
I think, well, I think the government has made some inroads already on this issue, particularly around making tax more digital. So I think we're already anticipating that there's going to be further steps being made in that direction. I think for early stage businesses, we're looking for simplification first and foremost. I think the tax system is so complex, and it seems to be ever more complex. And I think early stage businesses just want a really simple approach that's applied consistently over a reasonable period of time. And so hopefully tax day will lead to that sort of more benign tax environment for early stage businesses. But I think the trend towards making tax digital, I think, is something that we're probably looking out for.
Rain, can I ask you a little about this? Because I know that the CBI sort of had an argument for a while about no new taxes, but fundamental tax reform. And I suppose I came into yesterday's budget thinking, will we hear something about carbon? Will we hear something about online sales? Will we even hear a discussion if there's a dismissal of inheritance taxes or lifetime gifts or some version of wealth tax? Is there going to be are there going to be tax raising powers at a decentralized level? All of these big fundamental questions.
Yeah.
Is any of that coming, do you think, or is the impression from this chancellor that that's not his approach?
I think some bits are coming. So I think around green taxation, and actually next week we have a paper coming out which sets out some of our thinking around green taxation. How do we adhere to the principle of the polluter pays, and looking at a price on carbon, but also thinking about some of the trickier issues around the move to electric vehicles. We know that fuel duty over the medium term is going to fall away, and I think the chancellor did miss an opportunity to look at that in the medium term. So I think on tax day, and James, I think I worry for you a little bit if you're excited about tax day. Personally, I'm much more excited about June 21st. But I think, professionally, there will be lots of important things announced that day. So yes, I think there may be a series of consultations, and we do expect to see more announcements over the coming year, particularly ahead of a COP around green taxation. The Chancellor also announced yesterday that he will be looking at R&D, the R&D tax credit, particularly around data and innovation. So there might be a consultation announced around that, and that's something that we've been pushing for and think that we need to see. We need to update the R&D tax credit for a much more digital economy. We could also see more consultation around online sales tax. That was one of the questions that was raised around the business rates consultation. We may see more on that. I think fundamentally what we'd like to see is some more action around business rates. The Chancellor did say actually they're not going to announce on that until the autumn, but we'd like to see more progress. And for us, it's particularly around energy efficiency. And I guess going back to your earlier point around, what did this budget do for green? I think there were some important announcements around carbon capture usage and storage. I think the National Infrastructure Bank, should hopefully help to crowd in private sector and public sector investment into large infrastructure projects. But it was a bit silent on on heat and transport decarbonisation. And so I think we do need to see more progress around that. Business rates reform is part of that, but I'd certainly like to see more consultations around that.
And James, just
yeah.
to add one other thing that I think is probably worth mentioning that I thought Ray was going to come on to, which was that the Chancellor announced that there would be a review of the EMI scheme, which again is something that I think we need to watch very, very carefully. It's been an incredibly popular scheme in helping early stage businesses retain staff, and you know, we'd like to think that that scheme will continue in some shape or form. And so that's something that I think.
Rodney. Yeah, sorry, I missed that. A lot of small businesses that have got EMI backing will be interested. So what's his intention there?
He just mentioned that there would be a consultation and a review into the EMI scheme and its effectiveness in targeting high growth companies. And I think there was an implication that the far-reaching use of EMI schemes perhaps needs to be curtailed a bit. Now, I don't want to put words in the mouth of the Chancellor and the Treasury, but I think that was the indication. Maybe Ray will have some more detail on that, but I think it's something that we need to watch carefully because I think it's been a hugely successful for early stage businesses.
Mm-hmm. David, can I get touch on one small line in the Chancellor's budget yesterday, which was about the commitment of £100 million to HMRC in terms of COVID-related fraud and the hiring. I think he said it. I think it was going to be a really quite a sizable team. Given that, you know, often on the CBI calls we're talking about business reputation, the perception of business in the country, I found myself reading into that the government must be aware of a much higher level of abuse of some of the mechanisms of government support. Is that what you think they're trying to address there?
Yes, I think that's right. And look, there is always a tension when you have a policy, and whether this is in the tax side or whether it's on the welfare side, is when you're putting money out there. If you're wanting to support people quickly, there is a trade-off between speed and security, if you like, and making sure that the money only goes to those where it should go, and everything is properly checked, and there's no vulnerability to fraud. And the judgment that they took, you know, back in March, April last year was that speed counted, and they were right. You know, this was about urgently getting money out the door. But there is a vulnerability there, and when you look at the money that we're talking about, the sheer size of it, and the number of recipients, I don't think anyone should be shocked that there's an issue with fraud. Of course, immediately fraudsters will see an opportunity and try to pursue it, and I think HMRC always knew that, and their argument was, well, we've got to get the money out quickly, and then we will go after the fraudsters subsequently. And I think this is the second part of it. This is about, you know, I think they talked about 1,000 staff or so, but that is a big number by HMRC standards to go after this sort of specific area. And clearly there is a worry there, and they're wanting to make sure that HMRC is properly resourced. And you know, my experience as the relevant minister for HMRC for a number of years is that, you know, if you put the money in and you get the additional staff and invest in it, you know, it is well worthwhile. You get the money back, and some. So it's a sensible thing to do, as well as, of course, being morally right to prevent, you know, fraudsters benefiting from the government schemes.
I want to come back to Ray in one moment to sort of wrap things up, but before I do, I just have a question for you. Firstly, David, Freeports, right, which we know have been a sort of pet project of this Chancellor long before he got to number 11. Do Freeports move economic activity around within a country, or do they generate new economic activity?
I'm afraid I think it's the former. I'm not sure, particularly for an economy such as ourselves. I'm really not convinced that you will get much more additional economic activity. I'm not sure the case has really been made that it will provoke much economic activity. It's quite a nice political thing to have. You know, you can go around and point to factories and go to particular places and say, isn't this a great triumph? but I'm not sure that the argument that is made about clustering is that persuasive. So I'm a Freeport skeptic, I must admit.
And Rodney, a question for you. Given the record of the pandemic and the way in which it has highlighted unfairness within society in health and economic terms, how did you read the budget in terms of addressing that agenda?
I think it's a great question, James, and it really strikes the nub of the issue. I think there was little by way of trying to address inequalities that have been heightened by the pandemic. I think that was a deliberate choice by the Chancellor, because he wanted to make sure that the finances and the packages measures were targeted at COVID in the first instance, rather than a lack of sympathy for some of these issues that need to be addressed at a later date. And so I'm not passing judgment so far at this moment in time in terms of what the Chancellor's view is on those issues. We need to continue to advocate for more funding for Black and underrepresented founders. We need to continue to advocate for more funding for regions outside of London, which is, I think, come back to the Freeports question, an attempt to do so. Maybe it's not necessarily the right mechanism, but desire to kind of increase investment outside of London, I think, is the right thing to do. And I think the infrastructure bank in Leeds is an important step in that direction. So yeah, to answer your question, I think it's a shame that it wasn't there, but I think it's something that I'm going to be continuing to watch closely with interest, as something that the government will seek to address in the future.
Rodney and David, thank you very much. It's been brilliant listening to you. Rain, can you try and pull it together for us? When you sort of stand back and you pass judgment on the 2021 budget, what do you think the reading of it will be?
Well, I think what we've seen is the right focus on the support in the short term to get businesses through to the other side of this crisis as we gradually reopen the economy. And first and foremost, it's been about protecting jobs and making sure that unemployment rate stays as low as possible. And I think stepping back, that is going to be one of the things where we see, actually, despite having been one of the countries worst hit by the pandemic in terms of health and our economy, we've managed to keep the scarring effects on unemployment low, and that's what will really matter. The big question is, will we help to get this kickstarting of business investment, which will help to create jobs over the medium term? I think we've got that over the next 2 years, but I think the things I know I've got my work cut out at the CBI is, how do we make sure in 2 years' time we are still competitive, dynamic, creating the jobs that we need to see to help everyone through this crisis and keep our economy growing sustainably over the medium term, and really moving forward as well to a low carbon economy. That's what we've are going to be focused on. And I'd also be so keen to hear from all the CEOs, the CFOs, all of you out there who are poring over this budget. Do get in touch, let us know your thoughts, and set out our own work agenda, because that's, for us, the work again starts now.
Rain, thank you very much indeed. You certainly get the sense there's much more to talk about. I suspect we will be back, well, I know we'll be back on Monday at 10. I suspect we'll be back with time to chew over our anticipation of tax day. Just to be clear, Rain, in lockdown, you begin to look forward to strange and unusual things. And now it turns out tax day is one of them. March 23rd, put it in the diary. But a big thank you to you, Rain Smith, the Chief Economist of the CBI, Rodney Opire, the Chair of Cornerstone Partners, and David Gork, partner at McFarland's, and much else besides. Thank you very much indeed. It's been great talking to you. Have a very good day, everyone.
Thank you.
Thanks.